Hello and welcome back, guys. In this video we are going to be doing something a little bit different, and if you enjoy this kind of content, please let me know by leaving a like and subscribing, and also leaving a comment below this video. I'd love to hear your opinion about this one. If you do enjoy this kind of content, I will be creating videos for other companies as well, taking a deeper dive, which is what we're gonna be doing here with Alphabet. Now, Alphabet is a company that I am invested in, and I'm going to tell you why exactly. But first things first, we're going to be examining what Alphabet is doing here. And again, we're going to be talking about the finer details. Now, you will see that performance was driven by search and cloud, which is great to see for a company like Google. We do know that search is basically the most important thing for Google, but we do want them to be growing their cloud as well, especially with all sorts of competition existing among AWS, IBM, and all other cloud companies here. And you will see that Google is also investing quite some in AI here, which seems to be helping services particularly valuable for consumers, highly effective for businesses of all sizes, is what they are saying here. And they do look to be investing in deep computer science. Now, what they did, and you will see here, they had a solid performance with a revenue of about 70 billion, 69.7 in the quarter, which is up 13% versus last year, or 16% if you account for the currency issues. Because remember, the dollar has been super strong, and if you are having international affairs, if you are making money in the international market, you're gonna be getting a little bit of a decline because of this conversion. And so the company is actually still growing quite a lot, and 13% versus last year, or 16% pretty much, is actually pretty nice to see for quarterly growth. Now, they are focused on responsible capital allocation in support of growth opportunities as well. And we do know that Google also had a stock split, a 20-for-1 stock split in July 1st. And if you were a stockholder, you definitely saw that in your balance, or if you bought a little bit later. But let's examine what the company actually did in terms of its financials in more detail here and talk a little bit about it. Now, if we examine the finer details regarding what the company did in the specific quarter, you will see that they achieved what we said, like a 13% change in revenue year over year. That's an increase. And of course, 16% if you account for the pretty much FX changes. But you will see that the company made about 70 billion over here in the most recent quarter. And in terms of their operating income, they are at a little bit of a higher amount than the previous quarter. Yet their operating margins are down slightly, as you'll see, from 31% to 28%. So a little bit of a suppressing margin over here, which again, you could expect at this kind of environment that we're having right now. And you will see also that their net income has also gone down a little bit, from 18 billion over here to 16, with the diluted EPS also going down a little bit. So their profitability has been affected, and you would come to expect that a little bit with the overall market and the overall economy hurting right now. And this is one of the reasons why we were, of course, able to get Google, or at least I was able to get Google at a better price than expected. It has gone down quite significantly, especially for a company like Google here. So let's move on and take a look at some other details about the company's performance. Now, here's something that is indicating how healthy the business is over here. You will see that Google Search and Other, which is YouTube ads, Google networking, Google advertising, Google Other, all the income that gets generated for Google here, has been increasing. And you will see that pretty much every area has increasing income over here, apart from the other one, which is basically about the same. But Google services over here, Google Cloud, pretty much everything has been increasing in terms of the total revenues of the company, going from about 62 billion to almost 70 over here. Interesting to see that the total acquisition cost went from about 11 billion to 12.2 billion, indicating that the company potentially has some extra competition here, or they are just pretty much upping their marketing efforts here in order to acquire more customers. So this is an operating expense, of course, it's a cost, but if it brings you more revenue, then it's well worth it. And compared to how much the revenue has grown, this is not too much, frankly. It's about 1 billion over here. The company also has grown its employees quite significantly, from 144,000 to 174,000. That's a very significant increase in terms of the amount of employees here that have been increased in the 2 quarters. So interesting to see that the company doesn't really let people go, but actually increases their operation leading to more and more profitability through the years, is what should be expected out of this kind of operations from Google. But that's nice to see. The company is not really letting people go here. Okay, so let's move on. Now, obviously, free cash flow is extremely important, and this is why I wanted us to take a look at what Alphabet is telling us here in terms of their operating cash flow. And you will see that this actually divides, the report actually divides the periods in 2021, 2022, and this is the quarter and this is the year pretty much. And you will see, if you take a look at the net cash provided by operating activities, that the company's operating cash flow back in 2021 for the quarter, that is, was actually more than the current quarter, the one that we are having this report about. However, the year-to-date one, you will see that 2022 is actually higher. So this is why it's important to be taking a look at the annual pretty much performance of the company. Of course, every quarter matters, but not every quarter is going to be the same. And what we typically care about in the long run is eventually what the company is doing for the whole fiscal year compared to the previous years, again, compared to past performance. Interesting to see, things are seemingly going well for Google here, and it may be an interesting price that we could potentially get it at right now, or for some people have already bought it at a potentially interesting price already. So let's see some other interesting things about Google here to think about it more and to potentially decide whether it's an interesting addition to a portfolio. I'm going to take you through some interesting pieces of news that I have seen pretty much when researching things about Google. And you may have heard that there are some reports of potential US layoffs over here. Now, the thing is, a lot of companies are looking at some layoffs, but in regards to Google here, you will see that they have alerted about 50 employees, roughly half of those employed at the firm's startup incubator. They need to find a new internal role within 3 months. So in terms of Google, we are not really seeing too many layoffs here, and it's worthwhile noting at least, because some other companies could be laying off a much higher amount of employees, but Google seems to be a net buyer of employees here, so they seem to be increasing their employees rather than actually laying them off, which is nice to see. Company seems to be thriving. Another interesting news piece over here, YouTube will start sharing ad revenue with Shorts creators as the company tries to catch TikTok. Obviously, TikTok, a major competitor, seems to be getting a larger and larger piece of the pie. The Chinese competitor here trying to steal advertising revenue from Google. And Google recently, you will see it on YouTube, has been evolving their Shorts methodologies. You see Shorts all over the place, and frankly, I do like the most recent way they have actually utilized their Shorts, when you actually scroll and you get another one and another one and another one, almost like TikToky, I should say. And it looks like they're going to be sharing some revenue here, some ad revenue, which definitely helps, because this will actually propel the service upwards. It will actually help content creators create better content for the platform. So it's nice to see. Now, we don't know the finer details here. You will see if you take a look at this video. We really don't know what the amount is going to be. The only thing that we see here of that sum, which an undisclosed percentage, is allocated to creators over here, and YouTube will pay them 45% of that amount. And so, again, we'll see what's going to be happening, but that's what we have for this right now, at least for the moment. A very interesting article that I was taking a look at here on Seeking Alpha is about whether Google stock is a good long-term investment, and we have talked about it in my past videos. Of course, we're going to make a quick assessment at the end of this video as well, so stay tuned. But you will see here some interesting pieces of information talking about how Google has performed, and stock price declined by minus 29%, minus 26% for the 2022 year to date. And remember what we saw already with Google's financials, they still seem to be doing rather well. Yes, they had a little bit of a drop. Yes, their margins shrink slightly, but still, overall, they are doing fairly well in terms of their business. In terms of analyst ratings here, you will see that Wall Street continues to be very bullish on Alphabet, as evidenced by the fact that 48 out of 51 sell-side analysts covering the company have assigned either a buy or a strong buy for Google here. Very, very nice to see, and again, expected for the company that has suffered lately. Now, of course, we have talked about the key metrics of the company, so not much reasoning to be taking a closer look at this article's details over here. But let's move forward and examine some more things about Google. Another great thing that I like as an investor, I absolutely love this one, Apple and Google buybacks top US companies as repurchases fall nearly 22%. So overall repurchases in the pretty much stock market, the US from the US companies has fallen off a cliff, like nearly 22% from the previous quarter. Understandably so, companies are not doing as well. The economy is suffering lately. However, Apple and Google, as you'll see, pretty much led all US based companies in stock buybacks over here. Now you'll see that buybacks in the S&P were down 22% almost over here. And it's Apple that actually repurchased $91 billion over here. Like Apple repurchased $24.5 billion of its own shares, and the iPhone maker has repurchased $91.3 billion of Apple stock in the last 12 months, pretty much, which is very, very interesting to see. Alphabet, on the other hand, again a leader in repurchasing, repurchased about 15.19 billion of Google stock during the second quarter, up about 19% from a year earlier. So the company is still repurchasing quite a lot, quite a significant amount. And you'll see that the internet search giant has bought back about 55 billion in Google stock over the last 12 months, a massive amount as well. Apple is leading that, and then Google is basically the second one that is repurchasing a lot, with Microsoft being the third one, repurchasing about 32 billion in common stock, pretty much adding into their treasury stock and basically helping investors get more value out of their shares. In regards to what stock price we're expecting of Google in the upcoming 12 months, you can kind of see some projections here, some consensus rating and price targets over here. You will, generally speaking, see a high prediction of about $200, an average of 158, and a low of 130 is what is expected by most analysts here, who are generally speaking giving a buy for the company, or a strong buy in some situations. You can also get some estimates for what the revenue of the company will potentially be in the current year, at the end of the year, and the next year over here, expecting something near 289 billion for 2022 and 323 billion for 2023. Again, amidst a year where there is a lot of uncertainty, still we're looking at Google doing fairly well over here. So again, that's something very, very nice to see as well for the company. To finalize this video, you will see that we are taking a look at our tool over here, and Google is actually having some great metrics. We have talked about them in more detail. You will see that everything is in the green here. P ratio that is great, price to free cash flow that is great, outstanding shares keep going down. The company is super solvent and keeps growing. And what I quickly want to do, just to finalize the video again, is use our tool here, our stock evaluation tool in our pretty much exclusive tool suite here, and project what the company is potentially going to be doing in the next 5 years, and what kind of price it makes sense to be paying for it, again based on the company's financials, that is. And you'll see that the current revenue is sitting at about 258 right now. Now if the company grows, let's just say 8 or 10 or 12% a year, we're already having our low, medium and high estimates here. Analysts are seeing the company potentially growing at more than 12%, but in some situations significantly more. But we are going conservative here just to see what kind of price we're getting for these potentially conservative estimates. In terms of net income margins, the margins of the company have been growing. We did see an operating margin that actually went down a little bit recently, but overall the company's margins, the net income margins that is, have been growing, and we are going to go with something that makes more sense based on what the company's margins have been doing lately. So we're gonna go with, let's just say 25, 27 and 29 here. And in terms of free cash flow margins over here, which are relative to net income in our tool, we are going to go with 90, 100 and 100 and let's just say 5, because the company in quite a few years is doing more than 100. Again, we could potentially go a little bit lower here. It's again a matter of seeing what the average is, maybe going kind of down a little bit, kind of up a little bit. You can always try your own estimates by taking a look at our tool. By becoming a patron, you get full access. So you can find a link in the description box below this video if you are interested, of course. And our annual return is the typical 13% that I'm asking out of any single stock that I own. And if I hit calculate over here, you will see that it's only our low estimates for which we are off, and our medium and high ones are already there, with the current price being significantly lower than even our medium estimate here. And yeah, again, it's only our low estimate with revenue growth of 8% and margins that are deeply suppressed compared to the current ones. And remember that this company is also a fantastic company which is growing like crazy, and it's buying back shares. There's a ton of good things to see over here, and ton of the things that we already discussed in this video. I hope you enjoyed. I hope this helped you make your decision about Google. Again, remember to let me know if you enjoy this kind of different way of analyzing companies. Let me know, and I'd love to hear your opinion with a comment below this video, and I'll see you in the very next one. Thanks for watching this one for now. See you soon. Bye bye.